Alright, guys, let's go one more time. Doot, 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 doot. Sorry. Oh, my bad. Alright, so it's Sunday. Everybody is waiting for the casino to be open. While that is happening, let's talk Gamestop. Won't stop. Can't stop. Gamestop. Dun, dun, dun. Alright, guys, let's go. So I am kind of in the mood to talk about this particular thing. It's a Wyckoff theory of accumulation. Now, I did a video about this, actually a live stream. And guess what, you guys? It was not on here. I don't know why. If you... It's like I couldn't find that one. And it was blocked. If I... So I don't know why. So I'm just gonna redo this one. And hopefully this one will be more visible. And then we'll go through some video that I just saw about GME. Now, in that particular live stream, it was blocked and it says copyrighted. So I did show some video from CNBC, and so I think that's probably why it was blocked. But in that one, it was the more important information that I did was going through what I think is the accumulation point of GME, right? Institutional accumulation schematic and all that stuff. So let's get through this one and just, again, let's redo that live stream. So hopefully it's not too repetitive for people who've seen it already. So with that video, what I went kind of go through is I had a everything kind of like this type of thing. What is that? What is it called? Writing these what I think is happening in this particular trading thing, right? So let's go through that together at the moment. So as you see, again, this is not a perfect, way of seeing whether it is exactly same thing, but it's similar, right? Similarity is what we're looking for here. So you could say that this one right here is the middle part right there. Now this particular AR right here is what you're seeing right there. So let's do some labeling here. So just to give you more visibility here, right there. So AR is here. Wait, hold on. Let me redo this. Oh no! No! Shit. This is bad, you guys. This is bad. Okay, let me redo this real quick. I mean, this is the beauty of live, right? You get to see the nitty-gritty of content making. Okay. And then there we go. Let me paste that to this one here. Okay, and then there we go. There we go. So there we go. That makes a little bit better. Okay, it's a good thing because I am killing some time right now. But anyway, so this schematic here is what institutions use in order to accumulate, any security that they want. In this case, it's GameStop, right? Again, it may not be perfect, but at least you see the similarity in that sense here. So let me put a lighter point so you could see it better. So that particular point here is that one. And then this particular points right here is AR. So let's write that right now, AR. And then you have, hey Carter, what's up? We'll come back and listen to, okay, thank you so much for the support. Don't waste your time though, don't worry about it. Thank you. Okay, so AR, and then you have, I think this is ST, okay, and then you have this point here, could be SC, okay. And then you have this dip, and then that could be ST as well, phase B, okay. And then you have this little shenanigan right here in the middle. Now it didn't, quite reach this point right here, but you could say that perhaps, they just don't want option chain or whatever. They just didn't want it to go up in that particular region for whatever reason. More enthusiastic, too much goodness, right? Too much enthusiastic about the earnings report. So that's why they, take the opportunity to crash it. And when they do that, it's kind of messed up this whole schematic here. But still, the idea is for them to accumulate Gamestop down here. So that's the whole point of that whole shenanigan. And then you have this kind of trading. You could say that this is the spring while it's doing the testing right here to see how many people is willing to sell at that particular price point, right? And then you start to see the next phase, which is D right there around here. And so you have LP, right, around here. LP is right here. LP. There we go. And then you have this little thing right there. I can't see that. Is it LP too? BULP. Am I seeing that right? Let's look at it. BULPS. BULPS. Around here. Beautiful. There we go. Beautiful. There you go. And then this one is SOS base. So what you're seeing here, it's kind of similar to what this schematic is telling you about GME. So it's going through an accumulation phase, and then now they're ready to send it to phase E at the moment. We're going through that phase right now. You could disagree with that. I'm sure people could come up with a different explanation as to why the price coming down. But again, accumulation schematic has been around for, hundreds of years. And this is how institutions get into a security at a smaller or at the lowest price possible in that particular time period. It just so happened to be around this time, right? Around $20, $22, $24 is when you see a lot of accumulation too. Now that also can be seen in this indicator. You could see, a lot of buy zone here, right? Accumulation, buy zone here, accumulation, buy zone here, accumulation. Even up here, they're buying it in order to support this particular schematic. Again, because they want a price discovery for GME for whatever reason, right? Whether they want to take profit after after a to take profit whenever they send this up high enough to the point where, if you're institution and you bought it down here, accumulate down here, you'll be it would be very beneficial for you to sell at whatever high it could get to. And of course, it's also will tell you, let's see, they will spike the price up as high as they can so that they could take advantage of that draw or take advantage of that move. Okay. And if they bought it around here and here and here, accumulation, they would be up 141% if, it goes up to $46 a share. That's a lot of gain, for institution to have. So that's why they do what they do, right? Price manipulation is there. That's just one dynamic here. Because I can. Thank you for for showing up, for sharing. What the hell? But yeah, thank you for that high. Okay, so, and then, of course, I'm thinking with the cup and handle formation too, you kind of see where the measure price point would be. But I think this is what it is. Right now, they're trying to make the price kind of like going through the price discovery. Again, depends how many market participation is there at the high, right? Option buyers, option sellers, or whatever that dynamic could be. You would see whether we're going to break through this resistant point. Hardly any resistance anyway, right? But arbitrary. When was the last time we were like trading around this $40? Let's see. I feel like that was like back in 2002. So that resistance is there. And we'll see if they are strong enough to sellers, right? How many people would sell at that price point? And how many people would be willing to go long then too? So that's also curious for me to see as well. But let's just say around here, that seems to be the next spot that we're gonna have to watch out for. If you want to trade this thing, right? So please don't make any trading decision based on this. I'm just doing this for fun. And then, the whole cup and handle thing, that's also one of the bullish, pattern. And I talked about this one before, where you measure it from the bottom to the mouth of the cup, and boom. So that should be what institution or whoever want to trade this thing would do. And usually they would take profits wherever this ensue or whatever price action. But all in all, this has nothing to do with the company, just the chart. If you're just looking at the technical analysis point of view, I'm sure again, Rowan Kitty is well aware of what is happening as well right now, with the combination of what is happening with the swap and all that stuff. So perhaps he knew that the institution is ready to at least, send the price higher. How high? We don't know. Nobody knows until it happens. Now you could say that we are getting ready for the bigger move here to kind of take away some of this larger, cup and handle point of view as well. But it's going to take some time, how many accumulations, schematic that they're going to do in between that. But by next year, I think we're going to see a lot more excitement in that sense. But currently, yes, I'm sure people are going to bet it down like crazy. Can they contain it? I don't know. And who are they? It's the institution or the power that be? Can they contain it? But I think if there is any spike, it will go through this period where it's gonna have to come and correct itself around here, or it could do one of those things like this, right? A spike, immediately come back and find a support right here, and then it would trade sideways for a while and then spike again. I don't know how high, and then go like that to complete this whole cup and handle, the larger one. I don't know. That's just me kind of like postulating. So how is it going to play out? But no matter what, again, this stock would have to go higher in order for people to, again, we've been, how many people have been investing in this already? And, it's a matter of how are they going to reprice it. It's being mispriced for the whole 4 years. Well, actually, the entire existence of this stock, obviously. So because it doesn't, follow the supply, the true supply and demand. So they have to do this thing in order to get it to equilibrium. Okay. And on top of that, there's a lot of bad actors who are trying to, stamp in the innovation too. So who knows, right? Just my opinion here, you guys. All right. So the meat and potato of this live stream, I'm just here hanging out. Okay. It might be a long day again. Who knows? But I'm going to give myself an hour to an hour and a half. Last live stream was a bit too long, drawn out, and I feel like, okay. But hey, if there's no engagement, of course, I'm going to end a little bit earlier. Let's see. Anyway, so with that one, I just saw a video. And now, since I was kind of flagged for copyrighted for that video, I'm not gonna, I don't know why they do that. Because I show a clip from CNBC, maybe too long of a clip, perhaps. And so I got copyrighted and blocked. What the hell? That's stupid. But anyway, so I'm not gonna play the video here. But this is Tony Denario, obviously, pointing out that we're closing stores, right? And that's going to be ruining the run-up and advocating for a swing trading of some sort, right? Of course, he wants people to hold AMC forever until the end of time. But, you know who this person is. I've listened to him before I listened to Moran's, obviously, so I know this person is probably a plant. I don't know. Hey, allegedly, just based on my observation. But what I've noticed lately is that he's been kind of making this type of video, again, to strike some fear into, GME investor, or at least somebody who are looking into, establishing a new position in GME. And so, video like this, of course, it's informative, great on you that you're seeing that particular point. I don't know if it's gonna play out in that sense, but I think there is a motive for this person to make this video. Of course, I have a motive myself too, because I want to show a difference, a positive side of GameStop as to why the store closure is good for the company. Again, not across the board, obviously, right? If they're cutting to the point where they're not able to function, I understand that. And if they're cutting for the wrong reason, okay? Now, how can a business cut the store for the wrong reason? Well, Bed Bath & Beyond, for example, right? They cut it to the point where they couldn't even get back to the original company, right? They cut half of their store immediately, and then they still burning cash after that. So this one is different, okay? GME is different. When they cut stores, they don't do it to the point where they are decapitating themselves. No, They're just doing it enough stores to calibrate, right? If you're overextending yourself to the point where you can't get up later on in life, it's too extreme. What Jimmy is doing when they trim out the store is to cut out, unnecessary amount of expenses. That's why when every time they cut, and this is not new, you guys, like they've been cutting 3 years ago. Where were you? It's like, and then again to say, oh, they're cutting their Germany store and they're cutting their Italy store. To do what? Again, like it's the smartest thing when they are, when all of the currency around the world is depleting, is suffering, because of the dollar is so strong. As you've heard of Indian rupee went down, Chinese yuan went down. What's the other one? Japanese yen went down. Like, it's a no-brainer. Like, if you know anything about that particular arm, of course, shutting down the store in other country would be the best decision that GME would do. Now, as far as domestically, if they're cutting store domestically, I mean, there's some point of concern, but don't you know that we're in a recession right now? Don't you know that people are not spending as much? Don't you know that there's a software business that were kind of like shrinking, but still there's money to be made in that? And so, yes, it makes sense that they're gonna trim some store. I'm so confused. How is Cinemark so high and AMC is so low? They are literally the same company. Hello there. You know why Cinemark is so high? Cinemark, but welcome to the chat. Thank you for tuning in. Before I answer that question, so the reason being is that Cinemark actually makes money, and they don't have as many debt as AMC does. And so you're comparing the same industry to a very bad running company. AMC has Adam Aarons, right? And Adam Aarons, as a CEO, has not been a good steward of that funds that you are giving him. Or I don't know if you invest in AMC or not, but assuming that you are. And so it's based on leadership. Now, Cinemark actually bought their share back instead of diluting, their shareholder. And okay, let's look at the balance sheet while we're here. Is that Cinemark Holding? Is this the one? Right? Are they a holding company? What? Cinemark. C12. Could you give me the ticker symbol for Cinemark real quick? Because I want to make sure it's this one right here. Okay. But let me go back to GME real quick. But anyway, so the amount of stores that they are closing right now, it's not to the point where it's decapitating them, to the point where later on they're not going to have any business at all. So the misconception here is that, they're closing store, therefore they're dying. They're bleeding to death. The rebuttal for that one, I would say, guess what? Anytime they close out stores, their expenses would go lower. And they've been doing that for 3 years already, ever since Ryan Cohen and the leader has been here. I mean, look at how much we used to pay for those expensive stores that are not making any profit. You see, you spend this much just to lose money. Does that make any sense for a business to operate that way? No. But for some reason, this is somehow, it's not getting into people's psychology of, what business cycle is like. And of course, again, at the very moment that we're speaking right now, GME is as a leadership, without this, even without this investment, interest from that cash pile that they got from, shareholder, diluting shareholder, they would still be profitable. And that's what people are missing because of this type of video, telling people, oh, look, the store is closing. I don't care what they're doing in that sense. What is the, the result that comes from that store closure? Like I said, they've been closing down stores 3 years ago. So if they're closing a couple more stores, what do you think happens to the balance sheets? You see what I mean? So back in those days, we used to lose, what, $300 million loss, having this much expenses. Okay? So now, these expenses, if they're closing even more store, these expenses would be less than $1 billion. Wouldn't you want that? In the environment in which we don't even know what's going on, like recession, Great Depression, who knows? So leadership has been preparing for that for 3 years already. Okay, the ticker symbol, that was the one then. Thank you for that. I'll go through that real quick. And so the difference that we're seeing between, leaderships, and for people to compare AMC, since you bring it up, to GME, it's like so ridiculous that I don't even know how people would still, say, oh, AMC is going to run the same way. Okay, it might run the same way, but let's talk about it in the fundamental level here. It's like night and day. The leadership that AMC, as a company, as a, whatever, movie theater, the number one movie theater, why are they struggling so much, And it's not because of, what is it called? Pandemic. Cinemark actually makes money during the pandemic. I mean, not during the pandemic, after the pandemic, right? And so they were able to come out of it because they have a different leadership. Because anytime when they have money, they don't spend it willy-nilly. They are reserving it, conservative in that sense. Because back then, you're not supposed to be expanding. Just like how Ryan Cohen pay off debt, that was the single most important thing that any company could have done. Single most important thing. But guess what? When he did that, the price of the stock went down. And people were like, oh my God, why didn't you expand? Why didn't you use that money, $1 billion, to expand more, to buy more store, to go to this place, to go to that place? No. You know why? Because had GME done that, they would not be where they are right now. Had GME expand at that time, this expense ratio would have been $2 billion. Where are you going to get that $2 billion from? More than $2 billion. Shareholders. So the shareholder equity would have been less than $5 billion. Or $4 billion. Okay? Case in point. So since you've been bringing up AMC, remember, AMC had the ability back then, before all of the split and all that stuff, they were able to raise $2 billion. Okay? What did they do with that $2 billion? What did Adam Aron do with that $2 billion? Answer me. So you're asking me about Cinemark, right? What did Cinemark do back then? And so you go back to Cinemark balance sheets and then tell me that. I remember this, you know why? Because I invest in AMC at that time as well, thinking the same thing. that AMC is the same. It runs the same as GME. If GME runs, AMC runs as well. That's bullcrap, by the way, because they want it to run the same way so that people would be buying AMC hoping that it's going to go somewhere. Now, I'm not saying that they couldn't, but they will have to dilute until they couldn't dilute anymore because they don't have the same balance sheets. Nobody's going to want to buy it, unless retail just, pouring in their money to support that. But AMC would have 10 more years in order to get to where GME would be right now. So unless you have 10 years to wait for your investment to do something, good luck. I don't know if Adam Aron's going to be there in 10 years to do this, to keep on, running this company at a loss. You see this? Now go back to the point where I was trying to say here. Back then, GME was able to raise $2 billion. I remember this clearly because rather than paying off that debt, or at least spend half of that money to pay off the debt, he much rather buying the HYMC, buying a dying gold mine. What else? Making the theaters better, right? Putting into the business itself, and the business is not bringing enough money at the time, and so the bleeding would still be bleeding like immensely, and then on top of that, you have this interest expense right here. So look at it, 2019, right? $300 million back then. So let's go fast forward what it is today. More. So that's what is dying. That's why it's so much. It would have been more beneficial for them to use some of that $2 billion to pay off some of that debt. Instead of having this much interest payment, they probably would have what? I don't know, $250 million. Wouldn't that be a much more beneficial? Rather than spend that money, and then now you have this, operational income right here. So was the operational income higher or lower? See, I don't even notice that right now. Okay, so operational income still the same. Expense. Operational income. Expense is somewhat the same. A little bit lower. So it could have been even lower. What they could have done too is close out all of the movie theater. But guess what? They can't. They cannot close down because it's, what is it called? Like when you can't even close the unprofitable movie theater because they had a unreleasable lease or something like that, where they can't even make that choice, even if they are losing money and they close down the store. They can't close it down. They have to keep it open. So that was the stupid agreement that leadership has entered into. Whether it's on purpose or not, it's still a stupid decision. Why do you enter into agreement to keep your movie theater open at all costs, even though it's not making money, And so that's the whole point I'm trying to say here. Operationally, even though they are losing money right now, and look, even when they're making money, listen. So when are they making money? Right here, coming out profitable right there. You see that profit right here doesn't even cover the interest expense. Crazy, huh? Adam basically spent it on Taylor Swift and Beyonce. There you go. basically, right? And to try to do what? Back then, of course, people are not like concerts and all that stuff. I did spend money to watch Taylor Swift concert in the movie theater just to see what is the fuss is all about. And sure, I enjoyed it. I pay that ticket just to see, and the kids was there and they were enjoying it. Technically, it could work, yes, but the whole point is that when they do that, did they actually cover? I don't remember what year it was, but they weren't bringing in enough money to cover the interest payment even, right? See, this is what kills them. It's not the fact that they don't make money. Had they just make this money without the interest, they would have been fine, right? What kills them is this right here, the massive amount of interest expenses. And on top of that, retail was bamboozled into buying into this dying company, and it serves two different purposes here. Number one, kill two birds with one stone type thing, right? For people who are, shorting GME versus people who are, longing on AMC. It attacks GME as a good company, right? When you are couple these two together, it gives GME a bad name. And again, this is why they bring up the meme, give you that meme, okay? It's a meme stock. It's a reason why they give you that term for GME. And again, they do that to, for new people to come in to see like, oh, it's just a meme stock. Let's just ignore GME, right? Because it's the same as AMC. It's very effective for them, right? To do that. And on top of that, you get retail to FOMO into AMC and lose money on AMC so that they don't have the ability to buy, companies like AMC. I mean, company like GME, a legitimate company that is trying to do the best, business, a real business here. We're not talking about just some, dying business here. Leadership is not here. Ryan Cohen is not here to just make $1 million a company. Okay, he's here to make billions. Make this company, bring in billions of dollars. And so we're on our way to do that. But before we do that, we have to break down the old system, the old way of doing business here in this particular company. Actually, I'm not saying the whole time. But, new leadership invigorate this stock. It's not Roaring Kitty. It was because of Ryan Cohen. And in his early live stream, let me go to Roaring Kitty real quick. In his early live stream, he said that too. The bet is on Ryan Cohen, because Ryan Cohen is serious about delivering a good, a good business here to make money. They're not here to just playing around, playing footsie with the interest payment, massive amount of debt and has no way, no path to new profitability whatsoever. And again, this is why shareholders suffer. If you compare GME to AMC right now, night and day, you guys. Like right here, when the split happens, see, ever since the split happened, you have a company that is doing legitimate business up right there, 60%. And the company that is struggling to even put lights on, they want you to be here. They want you to buy into this company and tell you that it runs the same. It's not. See, from the original squeeze of GME right there, or sneeze or whatever you want to call it, They make sure that you are buying into this company right here at the top, and ever since then, it decreased in value because of what? Because of who? Adam Aaron. Because of leadership. He's not supposed to be successful. He's not supposed to make this company better. GME. AMC. And so, yeah, my heart goes out to people who still in AMC. I hope you make money. If it ever run back to the original here, right here. Let me see, before this, the whole dilution split. What is it? A 10-to-1 reverse split, and then now more dilution too. And even after all of that, after all of the dilution, all of that value that shareholder has been given, you still at this. See, look, you're still trying to pay off your interest expenses. How many years already? How many billions of dollars already being given to this leadership, and they couldn't even give give shareholder anything. So I'm hoping people, people open their eyes, okay, and stop comparing AMC to GME. The media will do it. But I hope that people are, realizing what they're missing, okay? While GME, look at it. 4 years ago, we were at the precipice of bankruptcy, okay? And leadership had to make some tough decision for the short-term, time period by using all the money that they raised from shareholder to do what? To pay off debt. So that this interest payment, right now, back then, it was an expenses. Okay? Right now, guess what? It's not an expenses anymore. It becomes an income. And it's not just small amount of income here we're talking about. We're talking about hundreds of millions of dollars in income. And somehow people are still blind to where GME is going to go. I don't get this, but it's okay. Guess what? It's more opportunity for me. You know why? Because not many people realize this yet. This is where you get early. You're so early into this company, you have no freaking clue. And yet, people are so distracted, still talking about AMC. Right? It's okay. The media is going to keep you distracted. They will. And people like this going to keep you distracted. Yeah? Again, throw every stones that they could muster at GME. It's like, okay, January is coming. You better sell your shares. Ryan Cohen's going to dump on your head. Ryan Cohen's going to leave, and Ron Kitty's going to sell him his share, whatever that they could muster. But yeah, that's the frustration that I have. But again, I'm so thankful that I was not one of the shareholder. Of course, I don't want anyone to lose money at all. If you're being misled into buying into this company, please, at the very least, establish a new position in GME. Okay? I'm hoping you can at least consider that. If you want to try to get your money back on AMC, you might be able to, but please don't place your whole life savings in there, thinking that you're going to get everything back. It will take you a very long time, or at least perhaps new leadership that comes here. But even then, I don't know how long it's going to take for GME to get back to original price point where it used to be up here. Okay, if you've been dollar cost averaging, I'm hoping that your cost average is lower than it is today. But I doubt it. I doubt it. Most people who are holding on to this particular point, I sold over here before they do the reverse stock split. Was it a reverse stock split here? No, this is GME reverse stock split. Sorry. Let's go back to AMC. Maybe that's what will give me their reverse stock split. Yeah, there you go. That's when they do the reverse stock split. Let me take this out. Let's see. I'll read your chat in a minute. KCR. Right here. I'm so glad that when they were announcing Ape, that's when I jump out. And then I think it was up here. So I lost some money. Yes, I did make a lot on the run originally. But I went in, I've been back in around here. So I lost from here. But it was dollar cost averaging of here, here, and here, and here. Thankfully, it wasn't that much of a loss when I make that decision to sell right here before they announced the Ape. I would have been, way in a worse position, because at the time when I was up here investing, I got lucky. I went in May, and then by the time, and I didn't sell up here, but I sold down here a little bit for profit taken, and then, went back in around here. I remember $33. That's when I started to, increase my position again, thinking it was going to do this, again, people have been telling me, oh, the same thing as GME, same, it's going to run the same. Nah. And then when Adam Aaron, discussed about Ape and all that stuff, I was like, hey, this is not a dividend. Why are you telling me it's a dividend when there's no value created? It's just to take away from AMC shareholder originally. So, but yeah, I hope people are, open their eyes and not compare the two. So go back to Jimmy. Let's go. Okay. So let's do that. And then hello, be more. Nice to see you live again. Thank you. Today I have been researching the power of shares buyback in a company that make consistent profit. Okay. If that is the part of the future plan in years, maybe it would be very good for the stock price. Of course. I mean, when companies makes more money that they know what to do with it, of course they're gonna, whenever they do buy a stock buyback, it's going to be beneficial for the current shareholder, or previous shareholder. But the people that come in after the stock buyback is usually the person that doesn't get as much value, because my opinion on stock buyback is that it's not giving it's not valuable as a company, per se. It's just a price manipulation on the company side, right? Not to say, because it's legal, of course every company is doing it. But as far as the economic value for any shareholder buying after that, the stock buyback doesn't give a shareholder any more equity than the previous current shareholder before the stock buyback. And so to me, I don't know if Ryan Cohen would do a stock buyback eventually. But that's going to be years from now, though. Like when GME makes more money than they know what to do with it, right? Just like Berkshire Hathaway, just like Amazon, just like, Apple. Again, they're not giving back to, the economy at large when they do that, and that's very bad for the economy, the whole economy. Stock buyback is not what you think, and I don't know if Ryan Cohen would choose to do that. I'm sure he would use that money to the best of his ability to expand the company as large as possible. Again, I can't foresee the future of what he's planning to do for the company, but I think we're far off from that. Even though we have an earmark for stock buyback, $100 million right now, there hasn't been new earmarked for that. And so I don't think he planned to do that at the very moment, at least another 10 years. Right now, we're expanding. Oh, we're trying to not bleeding, okay? Try not to, let me see, let me take away that. Try to deliver as much, as least damage as possible to the operational income. And even decreasing more expenses. So that's the immediate need for the company. Of course, we don't need that. With the interest income, we would have been fine anyway. But I think he is serious about using that $4 billion for something else that is much bigger than we could ever imagine, right? It's just going to take some time. It's going to take perhaps another year or two for him to, hatch the plan. Like I said, people who invest before PSA announcement, we didn't even know he was getting into the card business. It was that great because, again, had they know, they probably try to intercept a PSA from GME, right? Who knows, right? Who are they? I don't know. Somebody who tried to bet against this company. And so to say that he has no plan for that $4 billion to do anything other than expanding the core business here is mistaken. He's pretty smart. He's pretty aware of what's going on in the general market too. And the fact that he knows that the dollar is going to be the stronger currency to the point where, he make the decision to close out the European side of things because the currency war is happening right now. So any dollar that is outside of the US is going to be wasted. Doesn't matter if they are able to deliver, 20% more income. If that income is diminishing by the currency war, then you're not going to make anything, because everything has to be settled in dollar. Okay? And so I think it's more beneficial for people to realize, the bigger picture here. It's not just about operating businesses. And if you are international, you have to worry about those currency exchanges too. So DXY, look at here. Compared to any other currency, dollar is going higher. Whether you like it or not, dollar is going higher. Now, higher, more expensive the dollar, the more the whole world is going to suffer. And I don't know how they're going to stop this. The only way that they could stop this is to print more money. And when you print more money, then it presents a lot worse economic condition, because unless the wages go higher, either in the world, around the world, or in the US, people are not going to be able to afford anything. And so we're stuck in in that limbo to see what's going on. And so this is why cash is so important, and people are not listening at all to what is happening currently. And so again, that's why GME is going to be the company to be in if you want to. Cash rich, the ability for GME to buy anything at the bottom is immensely undermined. And so I don't know, this is why there's a concerted effort to get people out of this company so that institution could get a piece of this company at a lower price. And so whoever wants to sell GME at this price point will regret it, in my opinion, right? Who knows? I might be wrong. But anyway, do you see Moran's video? It's very good. Cody is good. His Cody? What is Cody? Which one was that one? I see every movie, every video Moran's has. Let me see. I don't know which one in particular. Of course, AMC Bigum is the the main people pumping AMC. Let's see which one. Yeah, because I don't know which one. But yeah, of every video Moran's do, it's always amazing. So, so that's no question. Correct. It would be many years from now if it would be ever happen. It would happen. I mean, yes, but I don't think Ryan Cohen's gonna do stock buyback. If anything, dividends probably makes more sense than a stock buyback. Since E3 is no longer a thing, I say GME create its own expose. I don't know what that means. What? You got me there. E3. Maybe I need to research on that. Is that a video game or a video console of some sort? Now that we are profitable, what do you think our new price target is? I have no idea. I mean, I could predict in a short term, there might be some enthusiastic about the next earnings report, but as far as price target, I'm doing it for fun per se, but who knows? It could fail as well. Any hope that they get a new NFT GME run? Long time holder. Okay, great. How long have you been holding? So let's see. How do I answer that question? Price point, obviously, short term, I think it's gonna go higher. I just don't know how high. There's been crazy prediction out there, and I'm gonna tame my expectation until I see that price on the screen. I won't, do any prediction. But if I have to predict, I think we're gonna go to the all-time high again. How long? Not sure. I don't know. I don't have any time frame. That's why I own shares, right? Most of my portfolio is shares, not call option or anything like that, because the time horizon is so specific, and I might lose everything, or I might not sell at the right time to get that benefit. So, so I'm not gonna play option on my majority of my holdings. So that's why I feel comfortable with holding GME for a long time, long term. So yeah, hard to predict in the short term. Let me see. Connect the dot. Oh, how could I not understand connect the dot? Jeez. I think the abbreviation throw me off. Of course, yes, connect the dot is always a good, very educational, and of course, it's one of the greatest series. Anyone who doesn't understand this, you have to watch all of this company, and I kind of like have an idea, have the inkly feeling that Nvidia was kind of pegged to GME run. Because when Roaring Kitty come back the second time, I've noticed a lot of call option was in Nvidia as well, and it was like millions and millions of shares worth of Nvidia, and Nvidia was already what, $2,000 or something like that, was already at the all-time high, and somebody, I don't know, somebody was buying call option to the tune of millions of shares, tens of millions of shares. So yeah, they have to pump their collateral. When you have the collateral to bet against GameStop, you have to pump it up, and at all costs. And of course, like every analyst out there, if you look at this right here, what's it? I keep saying, get the wrong one. This one? Yeah. So every forecast out there, would give you that highest price. And everybody's like, keep increasing, their valuation for Nvidia. For some reason, they would just keep the high ceiling for Nvidia. Again, they do this for a reason, you guys. And if you don't understand the dynamic between the short and the long and all that stuff, you wouldn't understand how this company could be trillions of dollars already, while let's see, while the PE ratio, sure, it would take them a smaller amount than GME right now, but GME could fix this in 2 quarters. I think 2 more quarters we would know the true PE ratio for GME, and so it's only a matter of time. And I'm sure we're gonna come around 14, 15, around there. Look at the price to book, you guys. You're paying 50 times for this company right now if you're buying at this moment in time. I'm not saying AI is not profitable. I'm not saying AI is not valuable. I'm just saying, just like Morans was saying, that you're not making money right now on AI. .com bubble the same way. You have all this company that has .com at the end of it, and then even though they're not making money, they still have fundings from, investor that are not aware of what's happening, not aware that they're buying at the top of the market. And so, yeah, people are going to lose money on AI too. People are going to lose money on Nvidia. I'm just not touching it at the moment. Yes, when it come crashing down, I will buy some Nvidia. But at what price? Let me see. Nvidia. Oh my God. I keep typing the wrong one. Kind of annoying. So, yes. Now, currently, I have a few shares of inverse ETF to Nvidia. So if Nvidia goes down, I will, have some profit. But I will add more to my, the inverse ETF here. So because, again, I think this is the top of the market, in my opinion. Yes, it could go a little bit higher before it come crashing down. I mean, look at the... let me see the estimate here. So they've been kind of like exceed expectation, but all of this revenue beat comes from that loop-de-loop thing that Morans was talking about in his connect the dot right there. And so, yeah, educate yourself. Go to Morans if you haven't watched that one. Please do it. You will be so much more aware of what this company is doing. Now, how low is it gonna go? I don't know, you guys, but my price point is at least down here. Dare I say? Dare I say? I don't know. So listen, I would do this right there. So that's the natural growth of a company. Or guess what? You see this gap right here? There's a gap right there. You know what they say about the gap? It will be filled eventually. So eventually, you're going to see this company trading at this level right here. So this drop, again, depends on how many people are panicking, how many people or stop loss hunting or whatever, right? It could quickly go down to that and then V-shaped recovery, right? You see a lot of crashes happens that way too. And so this would be the best buying opportunity, in my opinion. This would also be a best buying opportunity if you want to get into this company. In my opinion, I want to establish at least a position right here, because of the trend line that I just drew. Again, that's the top of the natural growth of the company. Natural, whatever natural means. So, but from there to there, is it going to be, again, it would the depends on how many people are panicking. But yeah, so I'm looking at that gap fill right there. It's going to be like 5 years from now before they realize that, I'm sure. But I'm waiting for that, like tracking it, like Roaring Kitty, tracking a stock for like 3 years before I get into it. But yeah. Hi, Uncle Eric. Let's see. You don't think about the market cap of GME? Let's see. Thank you. Oh, thank you. Do you think the stop loss at a certain price point would be beneficial to protect your money for when the price fall down at a big way? Maybe you can buy many shares. Sure. Okay. My opinion on stop loss. I really think the algorithm is set to hunt for those stop loss. Will I do it? I don't do it on my GME because I never know when it's going to be, doing this thing. And you may not be able to catch it at this bottom, you guys. Because most of the time it happens so quick. So listen, okay, let me right here. I mean, I've seen it so many times. It happens in GME all the time. Right? And every single time, right here, right? You see this huge drop. Now, unless you put your stop loss over here, right? And then wait how many days. But psychologically, people would not be waiting 12 days just to get it at this bottom. Because when GME was trading over here, like if this is the only chart that you're seeing, of course people would buy over here, right? And then if you do a stop loss from here, you're going to lose that stop loss too because you would have been stopped out. Okay? Yes, if you're lucky, you could scoop it at this bottom right here. Again, a trader mindset, right? But the point is, nobody would want to buy up here because they think it's going to go down even more. Right? While you're in this roller coaster, you would have been like, okay, if I do a stop loss here, it didn't trigger, right? But the stop loss that you did here, cost how much money already, right? And I don't think people would make the decision to put everything that they put up here back into this original position, all of it. They probably just do 20% or 50% or whatever, but then you're buying it up again. You see what I mean? So in hindsight, obviously stop loss is good. I get that in hindsight. But how do you know that it's gonna drop down to $20 eventually? You don't. I didn't know. I thought it's gonna continue. So the best strategy for me, knowing that about myself, is to buy, consistently, just like how Moran's is doing. He's doing it every day. A fraction of shares. You don't have to buy it, the whole share even. Just do it every day, and then you're not going to be sweating. And he showed his portfolio too. He's up, thousands of dollars just by doing that. And he used to be 40% down. You guys see what I mean? So dollar cost average is the best thing anyone could do for people who are not, watching the chart every day. For me though, I have fun. For me, I have fun doing this. That's why I'm watching the chart ever so often, and of course, I'm trying to find the best indicator for me to use for when I should the best opportunity to buy. Right? And even then, I get it wrong too. So, and so that's why I divide my strategy, the way that I do, just to capture, every aspect of this trading or investing world, right? And again, I'm only focusing on one stock right now. Most of my holding is in GameStop, mostly just shares. Very small portion, less than 1% of my portfolio is in call, and so my goal is to accumulate as many shares as possible before GME becomes the household name. Either the media would have to capitulate, and advertising for GME because now they're net long. They have to sell GME to someone else, the next investor or whatever. So again, that's probably going to be another 2 or 3 years before people become aware of what GME could be. Currently, we're just, again, speculation, right? I hate the term speculation on GME too, but in actuality, yes, we are speculating that Ryan Cohen is going to deliver a better company in the future, right? How much, we don't know. We're curious to see it too. But based on the balance sheet, I think he's doing pretty well so far. Well, exceeding my expectation, actually. So, if you see this balance sheet and you're still wondering what Ryan Cohen has been doing this 4 years or leadership, then I don't know. I don't know what else you're looking at this price point. Look at it right now. See, PSE, earnings per share. We are in the positive, right? Again, this is only account for, yes, money that they got from interest payment. But imagine when our operational, the core business bring in more money, people are going to shut up so quickly. Anyway, so E3 is a video game expo, just like going to the, okay, cosplay and all that stuff. Sure. Yeah. GME has the ability to do that. To do anything or not doing anything. With that interest payment, you could just sit in the, a yacht, and just breathe, and then you make money. That's it. Ryan Cohen doesn't have to do anything. the team will be coasting slowly, right? Like a ship of some sort that we used to be a small boat, a small little boat that leaks everywhere. And people in that boat is trying to salvage the whatever's left. And because of the effort of people who are trying to get to that successful shore, and not only that, whatever that boat is left, we were able to kind of rebuild it. So we were rebuilding it. Meanwhile, people were laughing at us. Those rebuilt, those shipwreck. Oh, why are you using these scraps to build this? What are you trying to do, right? Meanwhile, people are laughing at us. It's like, haha, look at them, And then now we are, have a skeleton of a boat. With small little new parts, new parts and old parts combining together. I mean, I'm imagining, but anyway, as you could see, we are now, taking shape and getting ready to sail again, but in a bigger way, It's a beautiful story, you guys. Like, I wish I know how to tell that story a better way. To deliver a little bit more impact. But I hope I make a good analogy here. But my point is, the story has an end. We're about to sail, and in a yacht, with a solar panel and everything. This is our solar panel. Sustainable, very slowly making enough energy to generate in order to, like, you don't even have to pay for electricity in this boat. And then meantime, there's a lot of economic activity in that boat, and, new people coming in and spending money in that boat. And so whoever, was the original builder of that boat is going to benefit so much more. And so that's us. That's people who are seeing the value of this company before anyone else. And currently too, like, I'm sure, look, in my opinion, okay, $30 a share is a steal. It's a steal. Okay, you get 30% equity in the company. 30. That's nothing to scoff at, okay? If you buy NVIDIA, you get what? 2%. If that. Not even, less than 2% of the company. Now, of course, depends on how much GME could bring in the future, right? 30% might be like $2 million. Because currently, 30% right here. Right now, sorry. Let me just go to the net income right here. $63 million. That's nothing to scoff at. But yeah, if you own 30% of a company that bring in this much money, come on. Eventually, hopefully, they're going to be able to grow even bigger. Can we 10x our income in 10 years? Yeah, that's the bet. Okay, let me go through the chat. Does GME have any big competition in the gaming e-commerce? The existing e-commerce company that focuses purely on gaming. I don't think they do. Every company's out there. Retail side, right? Technically, we could partner up with any retail businesses. Case in point, collectible items, right? On baseball card, that's a big one. And we're not even have that competition. And even if we have that competition, we could also partner up with them to, bring value to shareholder in that way as well. with the PSA thing, that partnership, hopefully will bring us a lot more customer. And I'm sure there is already evidence of that. If you look at the website, you could see how many people are actually buying and selling from GameStop. And yeah, the margin is large. It's massive. And so if you could bring more and more people in the future, you're going to have a, customer base that would always come back to shop at your store. And it's beneficial to PSA and also to GameStop as well. So that relationship obviously is going to, make GameStop as a brand become even bigger, more trustworthy, more operatable, more available to people who are not used to shopping at GME, right? At GameStop. The brand is so big, you guys. Like even Nat Turner was saying, like that's just a demonstration how big the brand is. Yes, it used to be a small little video game store, but now we're growing into something else. And that something else is what caused this anxiety for people who doesn't know what Ryan Cohen wants to do with that $4 billion. They want to speculate, right? And they want him to tell them that, but why not just sit out? And if you don't want to participate because Ryan Cohen doesn't tell you the roadmap, then sit out. Don't participate. Like Wall Street, you don't have to buy into this company. Period. You could miss out in 10 years, right? Wall Street people out there. And so again, this is a new way of how companies should be operating. Now, of course, people would want to say that, well, don't you care about your shareholder? Why don't you want to talk to them? Okay, well, there's so many reasons why, Number one, you don't want to tell your competitor or whoever wants to see the demise of this company, what your game plan is. Number two, perhaps they want it to be a surprise, Perhaps they don't want the original shareholder to be disappointed, right? What if, they got the wrong idea? Think about it. Think about this, okay? I'll go through the chart real quick, but chat in a minute. But let's think about this. If Ryan Cohen, before going to the PSA card, tell the investor, hey, I'm planning to go to trading card, sport trading card. You know what the media would go say? Oh, why would they? It's like, really? A trading card? What is that? What value are you going to deliver? And again, there's a reason for that surprise element. But I think it's more about delivering than just saying it and it might not come true, right? I think that type of leadership I respect more because, you don't know, you don't want to mislead people, but yet you understand, yet you want to at least give people the low expectation, but then over deliver every time, right? Over deliver how? With the balance sheets, right? I mean, the role of the CEO is to increase the shareholder equity, and he did that. Whether through dilution or whatever, right? He did it successfully and will continue to do it. Why not sell your own shares to people who are trying to bet it up, right? And the people that, try to spike the price up here, they're not really here for the long term anyway. So why not take advantage of that? Take advantage of the volume, being traded here. And I'm sure when we spike up again, we're going to take advantage of that volume. And imagine how many billions can they make if the spike up here, right? If they're able to sell more share at $90 a share. Ooh, you guys. We would be in the S&P 500 with just that dilution alone. Again, S&P 500 is what? Only how many $1 million? I think 18. Yeah, $18 billion. $18 billion. That's it, you guys. So we need to be at $42 and stay there. Okay, $42, that's all. Say 43, okay, just to be safe. So we need to hold at 43, and then we'll be qualified for S&P 500. And then on top of that, by that time, we will be able to be positive, trailing 12s and everything, and retain earnings. All of that's going to be addressed. So even more healthy, over time. But anyway. You guys have lost it now. Okay, I wish you the best. Okay. I love Jimmy without any conspiracy stuff. Okay. What do you mean conspiracy? I don't have any conspiracy. Sorry, I didn't mean to be rude. I just can't stand to hear what NVIDIA is actually the best company ever. Okay? What? I mean, fundamentally, technically, whatever. Okay. Hating on the best company ever. Okay. Michael Jordan is just carried by his teammate. Okay. Thank you for voicing your opinion. She sounds so cute. Who? Okay, let me see. Were you stressed when the price was very, very low? Your average. Okay. You told that your average is way higher. Of course. So was I stressed? So, okay. Now, let's address this real quick. I know you probably haven't watched me throughout the turmoil that was happening in my head. Okay. So listen, what I'm trying to say here. Okay. Now, I started my portfolio in GME right after I do a lot of research on AMC. I got lucky, okay? And AMC, I got at the very base, before the run, and I made 3x to 4x my money. Again, I had too many accounts, so mostly I made a lot of money from AMC. Okay, and I went all in at the right time. Again, lucky, right? But then when AMC began to fall down, because I didn't sell at the top at all. I wish I had. Had I known what I know, I would have. But yes, definitely, I would have sold. But I was holding on to it to so high, right there. At 50, I kind of shaved some of my position, but I was still kind of mostly AMC at the time. And so when I do all the research that was GME, before the split that happened, I went in over here. So when I make that decision, I was like, okay, I'm gonna do again, dollar cost averaging. So I was just slowly kind of building my position up here. And the moment in which I did that, I knew that I was going to be here for a long time, right? I knew then because I'm going to hold on because I was investing for the right reason, which is fundamentally. You know why I went in the first time? Was because I watched Ryan Cohen interview way before, he was in GameStop. The interview, CNBC interview, you could Google it. And so I went in for the right time. And so I wasn't stressed. I went in here, I went in here, I went in here slowly, right? To the point where my cost average was 32. Okay. So around that time, yes, I was like, okay, now it's down again. So I just keep accumulating, and all that stuff on the other account. So I stopped accumulating in this account because I couldn't anymore because, at the time, every profit that I got from AMC was already depleted. And when I max out of all of that account, I was at 42. When it comes down again, obviously I was like, okay, now I have to wait longer. So I started to accumulate based on my, income at the time, whatever I could put away, just slowly, kind of like, okay, I got $500 right now. Let me just buy GME. And so I built up that position to the point now that I have twice as much as my original one. And then also, a little bit more because of the options and all that stuff. I was able to kind of make a couple hundred here and there, with the spike. When Roaring Kitty come back, I did make a chunk. And then I convert that to shares. Again, selling covered call as well, again, just to, the name of the game for me at that point is to accumulate as much share as possible. And I did it, thankfully, right? But of course, sometimes, I lose some shares. Like, oh, had I stayed that week, I would have been able to get more shares. So now in hindsight, had I just dollar cost average down, I would have had way more shares than I have today, like even more. But because of, the hesitation and all that stuff, I become a little bit more antsy. Now, the reason why I separate my portfolio that way is because of my personality. I know that I'm going to be bored eventually with GameStop and, with whatever. Currently, I still have fun in covering it, but eventually I'm going to be like, it's just how I am personality wise. And so if I'm not constantly looking at the portfolio and seeing it going up and down, I'm not going to have fun doing it. And so that's why when I hear about, doing options and all that stuff, I'm like, okay, let me learn how to do this. And then just, okay, let me see if I could increase my holding that way. But only a portion of my gambling account that I do this with. And so the long-term aspect of things, I know that I'm going to be fine. With that, still for 42, $42 cost average, I know eventually it's going to go up to that. But currently, again, my overall portfolio in GME is way down. So I'm actually up right now. So if I were to add everything, I'm sure I'm closer to 25 than 26 right now. Do I plan to sell? Of course, yes. That a portion of it is going to go, but I'm not going to miss out on the run, so to speak, right? Whatever the spike that people are waiting for, that's what I'm waiting for as well. And then whatever's happening after, that, again, nobody could have predicted, right? It could be 5 years from now, could be 10 years from now, that you see the true price action that ensue from here. But at the same time, the company has to grow to that level as well. So to answer your question, yes, it was stressful, but I knew I was in here for a long haul when I first started my position. And usually, I go by Warren Buffett way of investing. It's like if you want to own a stock, you better think about the long term. If you hold a stock and you're not willing to hold it for another 10 years, then you have no business in holding that stock. Then you should be doing something else. So that what keeps me sane, and also the trading account, also the one that keeps me sane as well, just to keep me interested and following what's happening to GameStop. Thank you for answering that. I hope that I answered that question. Excuse me. Let me drink something real quick. I think I'm speaking too much. I wish I have a call in button. You guys could call in and speak on behalf of me sometime, It's tough. I don't know how Morans does it sometimes. Oh man. Okay, what's your price target for price target again, you guys, come on. Okay, so Uncle Eric, I think you're talking about NVIDIA. Maybe I don't have any conspiracy theories or anything like that. But if you want to say that I have conspiracies, so what? I don't know. Not my problem. Not my problem. Okay, so in this indicator, let me go through this real quick because I feel like I have not. So opportunity is there, right? Right now, of course, I'm kind of trimming some of my position here a little bit at a time. I have some freaking bill to pay, so I've been stressing out on that one. So yeah, the trading account is for me to pay my bills, like whatever I need to live off of and all that stuff, and unexpected bill at that. So those account is for my day-to-day, whatever I made in those account, whether it's from GME, whether it's from other stuff. But currently I just solely focus on GME option and all that stuff right now, but the other 20% of my portfolio is in 401k and all that stuff. So just to be safe, just in case, correction of some sort. So that's that. Now, like you have crypto people, right? Crypto people, as if I'm not one of them. Of course, I'm one of them. You see this consolidation triangle thing, right? If it ever breaks out of that, this is a larger triangle. And so if you look at XRP and all that stuff, right? The real fun is not until we break this triangle of consolidation, right? So it might take you another couple years to break out of this triangle. So the latest would be what? The longest, sorry. May of 2027. Okay. So MOAS will happen then. There you go. You got it. Quote that. Okay. Summer of 2027, you're gonna see that. Right now, I'm sure you're gonna see some blips here and there. Can anyone hold until then? If you see this, right? I don't know. Could happen, right? Anything could happen. There you go. Price point. That's my price prediction. Okay. So clip this if you want to, just to save. Triangle of doom. Boom. Done. All right, guys. I think I've got most of it. Let me see. I'm monitoring. Crypto has been kind of crashing. All right. Crypto, Bitcoin crashing. I'm following XRP right now. I know I've been kind of early into XRP before this, but I am looking to start a new position. For me, I think it's gonna hold here. There's a lot of good news with XRP here. I don't know why it doesn't let me do this. It's a triangle of doom too, right? So I'm looking for a breakout here. I'm not a good TA person, you guys. I'm just doing this for fun, so please don't make any trade based on this. Understand, fundamental is usually what I focus on, but it's always fun to see the price action, right? I mean, even Roaring Kitty too is combining the two, the TA, the technical analysis, and both with the deep value investing. It's what keeps that conviction really high. And guess what? When you have a high conviction on something, yeah, it gives you more value over time. So cool. All right. Any other question other than price action? It's pretty obvious, huh? What do I have right now? I feel like I don't have anything, you guys. It's 1 o'clock. It's been 2 hours. Okay, so let's see. Okay, one more thing before I let you go. Okay. So let me do some prediction here. Okay. On earnings report for the next quarter. Okay. I think we're going to be able to post $30 million in operational income. I mean, look at the swing. Come on. 30 million. Yes. Even with the store closure. Okay. Even with the store closure, we're going to be fine. Everything's going to be fine. I mean, think about that, 30 million in the plus 50 million in the investment interest. That's $80 million in the net income. Okay. Net income. Yeah. So what are we netting right now? Yeah. So, okay, 80 million instead of 60 million. It's still a good thing, right? You're making money and you're just stashing it. And yeah, for the rainy day. Why 50 million? Because I saw this one. I'm sure it's a little bit higher because every single quarters, kind of increase in interest because that interest will make more interest. So that's compounding. Okay. And meanwhile, while the world is burning, GME is going to be doing fine. Another point as well, eventually we're going to be the biggest employer in the US, right? Just like how Amazon, when every single store is not hiring, we are going to be the only company that's hiring. So think about that. Okay. So we need the world to burn down first though, before we become something. And when we're ready to expand, yeah, this is where the fun begin. Right now, not many people know about this. Many people are just too distracted by the small little incremental change that we have right now. That $7 million is not enough right now at the moment for people. because they're distracted by the minuses over here, right? 100 now will minus, very distracted. It's okay. Let them be distracted. Let them buy AMC. Let them buy whatever, you know. So meanwhile, if you want to accumulate GME at this price point, it's still early, in my opinion. In the upcoming months, you might see a short-term price action. And there you go. And then you'll see whatever they need to close at this price point. It might spike or it may not. So just be careful. All right, because I can, my price target for GME is 1 penny more than yesterday. Yes, good point. Yes, I agree to that. I agree to that. That's a good note to end on, though. Appreciate all of you coming in, engaging. Yeah, appreciate that. Okay, I'll see you.